Welcome to readtheticker.com. Here we have your backdoor steps. And inside those steps you've got a pink line which shows price action and the green line which shows support and resistance. Here we have at the bottom we have our accumulation, we have our markup, we have cause on the sideways pattern, and then we have our effect which is the markup. And we see this multiple times as price goes higher, a typical price action. This is the inspiration for our trend following tool called RTT Steps. Let me show you. Here we have the daily Apple chart from 2009 to 2013 with a blue clothesline. We have our RTT Steps indicator set at weekly 26.132.6 ball. Our reaction line or our pullback line at 65%. 65% is a setting between the upper step line and the lower step line. As a Wyckoff trader, this makes you be very, very lazy because a step pattern will not look like this unless the law of cause and effect is in motion. How to apply Wyckoff logic around this type of indicator is to study when prices gone against the indicator and fallen outside the step. That would be down here, and obviously up here. Here you apply your Wyckoff logic for accumulation. You're looking for selling climaxes, you're looking for automatic reactions, you're looking for any reason to show that the falling has stopped and demand will come in. Obviously the same patterns looking for Wyckoff logic can actually happen within a step. But the need for more care and caution when price action is outside the step is greater because obviously the trend is a lot stronger if it's outside the step. This is way better than the moving average because the moving average just goes with price. This one here, this RTT Steps, takes the volatility and the depth of true range that's going in a price action, and it gives you a feeling of how far price can move before it's broken. Every stock pulls back 5, 10, 15% and continues trend higher. So it's no different here. So this RTT Steps measures a trend within its normal price action of advance and pullback, or cause and effect. So ideally, in a good Wyckoff trader would want to see a pattern form and then show breaking into new ground, and then see reaccumulations on the way up. RTT Steps just allows you to see that more clearly when you're looking at lots of charts. And ideally, a red Wyckoff trader wants to enter after an accumulation pattern has been formed. Entering during the pattern is possible, but is also very high risk. So it's better to enter after the accumulation has been formed and we're breaking into new ground and the step pattern starts to show itself. Believe it or not, in this type of price action, you actually had people trying to short this market at new highs, or what have you, thinking that it was a buying climax and redistribution was coming on. Why would you ever do that? I don't know. The point about it is, as a retail investor, you want to see a well-formed, well-supported by the composite man, which is obviously the institutions, the big players, of a stepping formation of cause. That's your cause there, reaccumulation, and your effect there. Cause, effect. Cause, got an astounding effect. Obviously, as the price action goes up, you must be aware when price action breaks or does something different, there's a change of behaviour. Here you can see the reaction line was broken quite aggressively where it had not been done before. So therefore that is a change, and I think if you analyse the volume at that point of time, you would have a change of behaviour. So analysing this pattern here for distribution with the typical Wyckoff logic was warranted after you get a sign of weakness like that, because that really was a sign of weakness. And to start actually taking shorts, or if you wanted to, you'd really have to wait till the distribution had formed and the mark down had started. Trying to short it up here is really shorting a period of distribution before confirmation. And ideally you want to have confirmation after distribution has happened, which in this particular case it was here, and then you could ride the wave down. Once again, when price got down here, it was outside the step, had to wait for evidence of accumulation, and once the accumulation had formed, yes, you could enter on the end of it where you might have had a lower volume wave, because I think this was a selling climax here, but you could have entered here a higher risk entry, but a lower risk entry was after the accumulation was formed and breaking into new ground, and the steps continue on. And if you look at our members can go to this chart and rebuild it, and you'll see the steps just continued on. That is the best way for the retail investor to enjoy a trend and accumulate wealth, is to ensure that the period of cause and effect is in action, and this is easily seen by the readtheticker.com RTT Steps indicator. This indicator is available for members only. Thank you very much for watching.